Chapter 12, Merchandising Company, Month End, Year End, Closing, and Financial Statements. Before you proceed, this is the final chapter of the discussion of a merchandising company. Much like the service business, before you close your books, you will need to perform the bank reconciliation for the month of December. Then prepare any adjusting entries needed, and your financial reports will accurately project the operating results of your business. So, match your individual account balances with that of Chapter 11, and you should be comfortable to move on into this final Chapter 12. You can close off of this screen and you can start your bank reconciliation. On problem 12-2, you're given the bank statement. So you are going to reconcile this bank statement with the general ledger and go to banking, reconcile. Be sure your date is December 31. Your ending figure is given in the bank statement, and that is 173,596 and 79 cents. And your beginning balance has been provided when you set up the company. Your service charge is $158.64, and you want to date this December 31 also of last year. The GL account to affect or to debit this would be the bank service charges expense. Then your bank statement is also showing interest income of $22.60. This is dated December 31 of last year, and the GL account to credit this would be the interest income account. Since it is not in your chart of accounts, you want to create an account that is called interest income, classified as other income. Save and close this and continue. I will show just a few, marking the few accounts. Observe from the bank statement and the general ledger, deposits and other credits. So as you see them, you will mark them as you see the amount from the general ledger compared with the bank statement. You will mark them, and the checks and the payments are marked as well. Observe, just like you did in Chapter 4, you would like to look at your checks and deposits as compared to the bank statement. There will be deposits that will not be marked, but they are in the general ledger and they represent deposits in transit. There will also be checks that will not appear in the bank statements. They will be outstanding checks. Once you have marked them all accordingly, you will notice that there will be deposits and other credits not marked and checks and payments not marked. They will appear in the next month's statement. The difference must be zero. If it is not zero, you have missed some of the items. Then you can click Reconcile Now. Once you click Reconcile Now, you are given the reconciliation summary as of December of last year, and you wanted to verify your accounts with that, and you will also be given your reconciliation detail, the checks that have been paid by the bank and deposits credited to your account. Once you have done this, your last and final stage would be to prepare the adjusting entries for the year end. Click on this. You are given problem 12-3, the following end of the year adjustments, and you can do that by going to the company tab and make journal entry. Your date will have to be December 31, and your entry number is 15 for the first one. I will show you the first one and you can complete the rest of them. You can reference chapter 3 if you have any questions and things that are not clear on the adjusting entries. So the first one is debit to depreciation expense. And remember, there's only one depreciation expense for this one, unlike chapter 3 where you have depreciation expense for every asset. Now this is $8,000 that will be debited to the depreciation expense account, and your memo will be year-end adjusting entry. Now this depreciation expense is for the medical equipment, so your credit will be to the accumulated depreciation, and this time you need to identify the asset. It's medical equipment. And click that and you can save and new for your next adjusting entries. Complete all of the next adjusting entries up until G and compare your financial statements at the end. Note that when you get your profit and loss statement, you want it to go to reports, company, and financial, and get your profit and loss standard. And get your year January 1st to December 31 and compare the individual account balances to match the check figure. Purposely, I gave you a net loss example for this practice set, just so you will understand how QuickBooks have determined and how it will show that in the financial reports. Now you want to get your balance sheet as well. Your balance sheet is ending December 31 of last year, and check your individual account balances. Since this chapter talks about financial statements, I would like you to determine and look at, analyze, and understand how the owner's equity is structured. The retained earnings is part of owner's equity, and that was the beginning balance that was structured in chapter 6, and the capital as well. So the net income, which for this example is a net loss, is shown as a negative figure, so minus 11,562 and 87 cents is shown as part of the owner's equity section. So to get your trial balance, you would like your December 31 trial balance and compare your individual account balances to match the book. These are the 3 financial reports required for your final and last assignment submission in Canvas. But since we're in this chapter, I'd like to show you the importance of the next period. I'd like to show you the trial balance of January 1st of the next year. Look at how the retained earnings have been structured. What happened here was the retained earnings from the beginning amount of $25,015 and 15 cents now was dropped to $13,452 and 68 cents. Where that came from is your balance sheet showing the beginning balance of $25,015 and 15 cents was subtracted the net loss of $11,562 and 87 cents. Once that was taken out, where that came from is from the profit and loss statement. Once that came out, your retained earnings now drop down because of the net loss. If it would have been a net income, it would have increased. So by definition, your retained earnings is the accumulated net income and net loss of the business. We did not have any drawing for this time, so there's nothing to close on the drawing. But I'd like you to understand the effect of your financial reports so you can prepare them for your clients. And this is the end of the chapter discussion.